CEO of Proceed, and Mr. Muhammad Ahmed, the Commercial FP&A Manager. We will first be listening to the management feedback, and following this, we will open the floor for your questions. Mr. Fahad, mic is yours.
Thank you, Sarah. Good afternoon, everyone, and thank you for joining us today for Demisco's earnings call, where I'm delighted to present the second quarter of 2025 and the first 6 month performance results, along with my team. As always, we sincerely value your continued interest in our company, and this is always evident in every interaction we have across different investor conferences forums. Today, we're excited to illustrate the progress of our journey for the long term for Saudi Arabia, as Saudi Arabia is advancing at a rapid pace across many industries, as 2030 ambition is getting closer to sight. Potential in healthcare sector has certainly generated international interest, and I'm sure you are witnessing collaboration more often than before. Aldawaa, alhamdulillah, is well positioned to capture any initiatives that crosses through its verticals, especially when it comes to healthcare plus convenience. Next, I'm also pleased to report that Demisco Group has delivered another quarter of strong performance in revenues and profitability resilience. Overall, I'm pleased to say that Aldawaa is growing at healthy rate in the region and remain true to its purpose and value in the community. In this table, you can see a clear progression of business performance against our annual guidance set for 2025. Despite a competitive quarter, our team delivered a revenue growth of 7.4% for the first 6 months of 2025. Furthermore, our core business retail is growing at a healthy 6%, while our other verticals are accelerating their growth with over 30% year-on-year for the first half of 2025. And today I'm delighted to have our CEO of Proceed, Muhammad Al-Ghazani, who will be touching point on Proceed later on in the presentation. We have fine-tuned our annual operating profit growth guidance to a low single-digit growth. This is deliberate decision to accelerate strategic investments that will strengthen our core business, enhance our readiness for the medium term, and give each of our verticals the platform they need to excel. To elaborate more on the rationale of operating guidance revision, these are the below 5 key factors which led to the revisit. First of all is the building a footfall. So simply in retail field, footfall is the biggest contributor to growth. And this where we decided to invest more on corporate and operational marketing activities to build traffic into the store and e-commerce platforms. Customer acquisition cost is being more efficient. My colleague, Mr. VJ, will touch point on the number of recruited new loyal customers under our unique loyal program, Arbahi. Second, expansion penetration, where expansion in current time is not the same as previous years. The real estate landscape in Saudi Arabia is evolving, rent especially in major cities such as Riyadh. Third, the e-commerce ramp up. The company has made great investments initiatives into its omni-channel readiness by uplifting the infrastructure and enhancing the UI UX experience. New application to be launched soon, where we will have all integrated SAP through all of our physical and omni-channel of the company. Fourth is the competitive landscape. Retail space, retail price and promo elasticity are getting aggressive, and to play for the long, we will need to build a competitive edge to enrich our basket growth. Our house brand portfolio, alhamdulillah, has enabled us to tap into untapped customer segments or enhancing commercials of existing categories. Last but not least is our dispensing leadership. To maintain our leadership in dispensing and strengthening our competitive advantage in the region from a patient-centric 360-degree approach, we will continue to invest upon upgrading dispensing experiences with the best-in-class technology and convenience. Moving to our financial highlights. Aldawaa has generated a net profit of 191.7 million for the first 6 months of the year, marking a growth of 0.3% compared to the same period last year. The company continues to focus on strengthening financial position at the same time as maintaining focus on top line mix depth. The company overall revenue and profitability performance positively contributed to cash flow turnover improvement that showed a debt reduction of further 101 million in the first half of 2025. This is well evident in our financial ratio health too. The team will talk more in depth, operationally and financially, later in this call. In summary, witnessing this consistent quarterly momentum is truly a sound demonstration of our growth journey and ambitions. If we move next, please. Here we would like to emphasize that Aldawaa is not just a traditional pharmacy retail chain. Instead, we operate across the entire healthcare value chain, spanning retail pharmacies, distribution, logistics, healthcare solutions, and manufacturing. Today, we'll be providing a strategic update on Proceed by our new CEO of Proceed, Mr. Mohammed Al-Gwazani. Ultimately, this strategic integration allows Aldawaa to act as a proxy for the overall healthcare transformation in Saudi Arabia, aligning with Vision 2030 and ensuring long-term sustainable growth. I'll now hand over to my colleague, Mr. Vijay, who will walk us through core of our group, that is Aldawaa Pharmacies business, which includes business updates and operational performance.
Thank you, Fahad. Good afternoon, everyone, and thank you for joining us today. I will start the updates first with the business performance on retail pharmacies and expansions, followed by other operational performance aspects. Starting with the pharmacy network, excuse me. As shown earlier in the guidance slide, year to date, June 25, which is the first 6 months, Aldawaa opened brand new to 36 stores in Saudi Arabia region. These openings were done where we felt white space opportunities to penetrate deeper into the vast community spread in Saudi provinces. Along with the new openings, there was a closure of 6 stores, which brings our net openings to 30 stores that is illustrated in this slide. In quarter 2, 2025, as part of our strategic expansion, our network grew by 30 net openings. These include 19 community stores and 11 non-community stores. With this addition, our retail store count now stands at 954 stores, that's 954. The split of this from an overall perspective is 922 community stores and balance is 32 non-community stores. And I'll talk a bit about non-community in the coming slide. Excuse me. One point to add on expansion is that the market real estate dynamics are evolving very fast. I'm sure you would all know how the rental markets are going on in the region, as Fahad briefly stressed upon. However, what we are doing differently is being very mindful of the mix of expansion, especially where it harnesses, focusing on where it harnesses our dispensing competitive advantage more and more. Moving on to the revenue dispensing, moving on to the dispensing part. So as some of you might know, Aldawaa annually dispenses over 32 million prescriptions. And we are the region's number one retailer when it comes to dispensing and dispensing related automation, as we lead cutting edge technology on this front. The company witnessed a rise in prescriptions compared to same period last year by 10%. With the innovations and automation channels created, Aldawaa is growing fast in dispensing penetration into regionally and digitally in this fast, rapid e-commerce driven Saudi Arabia region. Furthermore, what has been an important credibility enhancer for us is our widening penetration into the non-community stores. Now, when I say non-community, this has helped us deepen our dispensing penetration through the clinic and hospital pharmacy platforms. And this is a key mix factor in our expansion strategy, which is constantly helping us strengthen the dispensing mastery and building our credibility in the region. Aldawaa opened 11 stores in this particular section of non-community stores in the first half of 2025. And more updates to follow, and we surely will keep you posted on this front. Moving on to omnichannel. I thought we'll just today give you a little bird's eye view on how Saudi Arabia is evolving and the e-commerce. So this is an important takeaway from one of the Nielsen IQVIA summit. You can see that Saudi Arabia is leading within the phase two, which is in the Middle East, but still is within the 2 to 10% mark as a overall from the panel done. Now, it's one of the fastest growing and nearing towards phase three, and I believe so. That's where the country is heading towards catching up with the rest of the developed markets of Asia and the US, and we feel it as we see it in our retail sector more and more. What is happening differently in the business, omni-channel for us is also growing at a fast pace. And today I'm pleased to inform that we have reached 16.1% contribution on track and are firmly on track for the 20% vision in the next 12 to 15 months. Furthermore, I would like to today double click on some of the omni-channel growth drivers to broaden your understanding and also highlight the efforts our team is putting in the past few months to accelerate on this particular channel aggressively in the coming months. Very briefly, assortment-wise, we have introduced and expanded our range further to meet new and young consumer needs. And this is a continuous task in the retail field. But however, evolving trends demands to have it early on shelf and online. And this is where our team has been working very hard to build that availability aspect, especially into the trendy business. Furthermore, we are seeing a double-digit rise in also online prescription volume. And this is another testimony for us in terms of our dispensing, where we continuously enhance the patient journey online and in store. Basket mix remains a key factor that supports the margin enrichment in omni-channel. And again, assortments and house brands are key sweeteners in this particular front as well. We will be soon launching our application within 2025, which Mr. Fahad briefly stressed upon, and that will truly unleash our core growth potential in the coming months. Moving on to our house brands. Pleased to say that house brands have maintained a steady growth of contribution of 13.6%. Mind you, they have held this contribution despite challenging and competitive landscape, and that's a big credibility to our team to maintain that share in the toughest quarter of all. I'm happy to say that our private label team is coming up with more exciting portfolio and assortment in the coming quarters that will really support today's elasticity needs and also consumer price sensitivity sentiments. And what makes this even more important for us is that the sum of the private label, the private label range will be Saudi made. And Aldawaa is an important contributor to localization initiative in this country. And and we owe that, and to make sure that we continue to bring in more localization into our private label. Moving on to Arbahi. In quarter 2 2025 end, Arbahi loyalty program welcomed a brand new 350,000 guests into our stores online and into our stores and online. Arbahi loyalty base now represents over 87% of retail sales, and we are proud to maintain a base of over 10 million as well. New loyalty dynamics offer tier-based promotions and customized offering. New strategic partnerships, which Mr. Fahad will brief us on a bit later in the presentation, were completed to boost loyalty enrollment and encourage repeat purchase, which further strengthen long-term customer relationships. I'm pleased to today talk about Arbahi loyalty campaign, which the team deployed to build loyalty base and traffic into the stores and online. And just want to stress upon how important these investments are in current times that help us in staying active in a competitive retail environment. Social media burst and exposures investments are key to reach shoppers and patients. And I'm glad that the team did a fantastic job to drive maximum engagement through these forums. These are some examples of the campaign done with influencer coverage through our TikTok collaboration. I'm pleased to also today showcase outstanding work of our corporate marketing and digital teams on the Hut season in 2025. This was not an ordinary campaign. This was taken a little bit more deeply and with a strong moral aspect into what we live and truly devote our purpose into our executions. It was not just another pharmacy feature, but rather a journey that throughout was supported the pilgrimage journey. Aldawaa was present in several locations around the Hajj site, and what made it different was Aldawaa's team's service assistance in the pilgrimage uh, journey. And these are some of the pictures to showcase what was done differently this year. Moving on to business aspects and to double click on operational profitability matrix. In terms of revenue, comparing second quarter of 2025 to 2024, you can see the company achieved a revenue of almost 1.7 billion as compared to 1.5 billion. That is a healthy, nearly 6% growth year on year. What is really assuring to see in these charts is that our core business is delivering a steady, strong performance every quarter on quarter, whilst other verticals are beginning to flourish double digit every quarter on quarter too. Company's retail continues to grow at a resilient growth of 5% with quarter-wise and a 6% year on year. This performance assures that our core focus and efforts are in the right direction for enhancing the retail business. Company verticals grew over 23% in quarter two, and my colleague, Mr. Mohammad Al-Gwaizani, will talk more about this in the proceed section. Let's double click revenue further. In quarter two, specifically, there was an incremental of 90.4 million in revenue growth. On the right chart, you can see the breakdown of this incremental values, where 70.5 million approximately came from the retail and balance from other verticals. One observation I would like to bring here is that looking at overall retail performances in the region, especially across pharma and FMCG players, I would like to draw your attention on Aldawa's consistency factor. Aldawaa is probably Aldawaa is probably the only retail player which is growing versus previous quarter in this year. Our quarter two grew by 1.2% compared to quarter one 2025. And this proudly signifies the operational investments we are driving to build that share momentum in quarter two. So this is a sound consistency delivery from Aldawaa, which really reflects upon growth versus previous quarter. From a 6 months angle, if you look at the revenue grew 7.4%, again credit to the mix growth synergy between core and verticals. Moving on to gross profit. As evident on the chart on the right, our gross profit absolute, which is a key focus, the growth has been steady as well as firm to support our financial situation strengthening. We can see an incremental growth of 20.2 million in quarter two, which that represents a 3.5% growth. From a 6-month performance basis, there was an incremental 66 million in gross profit, marking a growth of nearly 6%. I would like to take a moment to thank our Damsco leaders for their quality planning of business initiatives to deliver a strong growth and holding a margin of 36% almost in a competitive period of the year. From an expense perspective, in quarter two 2025, we held steady at 27.9 despite 34.8 million expenses compared to same quarter last year. This is mainly attributed from the business expansions, operational investment, corporate and seasonal marketing campaigns, and that was illustrated earlier. And again, those were the key investments to maintain this top line efficiency and also at the same time drive more share momentum across the region. Moving on to operating profit. In terms of operating profit, Aldawaa generated 259.3 million in first half and of 2025. This period witnessed a decline of 2.1% compared to same period last year for the business reasons already mentioned. The operating profit margin stands at 7.7%, and this is attributed to top line fueling and business investments on core strategy. We already elaborated this in operating income guidance slides, and so I'll move on to the net profit. Looking at the net profit measure, Aldawaa generated 191.7 million net profit after zakat in first half of 2025, which is a growth of 0.3%. Margin-wise, we witnessed a decline of a very negligible 40 basis point, but still close to a notable 6% mark. On that note, I would like to hand over to Mr. Mohammed Al-Ghwezani, our Proceed CEO, to take us through the developments on Proceed business.
Thank you, Vijay. Good afternoon, everyone, and thank you for joining us today. My name is Mohammed Al-Ghwezani. I joined Aldawaa Group in the second quarter of this year. And before that, I used to be the managing director for Johnson & Johnson in Saudi Arabia. And today, I am pleased to share a new fresh update on Proceed. But before I go ahead on that, I just wanted to mention that at Proceed Healthcare, our commitment to excellence in every aspect of healthcare logistics and distribution is our ultimate goal. And we wanted to achieve that by expanding our capability, diversifying our portfolio, and setting a new benchmark in this industry. As an update within the Proceed, as you see in the slide, now within the Proceed Healthcare, there will be two main vertical, Proceed Healthcare Logistics and Proceed Healthcare Distribution. All these initiatives compensated into a growth, a very successful performance, and yielded almost 33% year-on-year growth. For Proceed Healthcare Logistics, can you go back? Our logistics division has made a significant strides in advancing our operational scope. This semester, we successfully enhanced our capacity to transport sensitive blood samples within the highest standard of safety and compliance within SOPL. In addition, our team has demonstrated operational excellence by managing a full-scale store operation for hospital warehouse, reinforcing our position as a trusted partner in critical healthcare supply chain management. Within Proceed Healthcare Distribution, this arm continues its a strong upward trajectory, where we have broadened our generic pharmaceutical portfolio to meet the market needs and demands, and also at the same time achieving a remarkable growth in distribution of blood derivatives, an area where speed, reliability, precision are important and paramount. This moment reflects both the strength of our partnership and the trust that we have to build the clients across the sector of healthcare logistics. Okay. So as Mr. Fahad mentioned also, and Vijay, as you see here, we grow on quarter to quarter by almost 20 million, and this representing almost 23% year-on-year increase. When we compare the semester versus semester of last year, there was an incremental growth of almost 55 million, marking almost a growth of 33% year-on-year. Looking ahead, We will continue to invest in advanced logistic capability, also expanding our product offering and deepen our relationship with the principals and partners. Our mission remains clear to deliver the critical healthcare solution with unmatched quality and efficiency, driving value for our stakeholder and improving the outcomes for the healthcare of Saudi Arabia. Now, I just wanted to hand over to Mr. Fahad to walk us through Damasco corporate development. Thank you all.
Thank you. At Damasco, we're constantly elevating our presence and penetration in the healthcare sector. And today I'm pleased to share an update on our key development focused areas through which we believe more growth can foster. These are community, heritage, innovation, and partnership. When it comes to community, and as shown previously by my colleague, Mr. BJ, there were some great examples of our penetration within CSR initiatives, but also when it comes to Saudization and how is the company supporting the Saudi community to support local talent development and also build a trust in pharmacy business mystery. When it comes to our heritage, I believe my colleague BJ already shared an earlier Aldawaa presence during Hajj season, which we are honored to be part of such an important religious journey in the community. An interesting point is the innovation. Alhamdulillah, Aldawaa was honored to receive the CHI award for digital innovation for our groundbreaking Pack to Patient program. This is the first of kind in the region, in which this initiative leverages our smart self-service kiosk and an integrated digital ecosystem streamline prescription refills, automate order preparation, and significantly enhance patient satisfaction. This drives me back to our dispensing capabilities as a leader in dispensing in Saudi Arabia. This solution enabled the Aldawaa to dispense more than 25,000 prescriptions centrally. What's unique about it is that it does the labeling, the packaging, sealed, also labeled on the package, where we have a great value proposition and unique product fit for chronic patients in Saudi Arabia. Last but not least is our partnerships. Aldawaa has signed a landmark agreement with Kidana, of which Aldawaa continues to be. So just let me explain who's Kidana. Kidana are basically the operator of all Hajj sites during Hajj season, in which we operate commercial units in the holy sites during Hajj season. This initiative reflects our dedication to continually uplift and smoothen the experience of the pilgrims. What's unique is that it includes 4 sites plus our portable pharmacy, and we've signed a contract of 3 years to be present during the Hajj seasons. Last but not least, Aldawaa Alhamdulillah has established a strategic partnership with Saudi Airlines Al Fursan loyalty program, enabling customers to seamlessly convert Arbahi points to Al Fursan miles and the other way around. And now I'll hand over to my colleague, Mr. Muhammad Ahmed, to provide outlook on business financials on behalf of our CFO, Mr. Sharif, who's currently on leave.
Thank you so much, Fahad. Good afternoon, everyone. Since the majority of the quarterly income statement measures have been comprehensively highlighted by my colleagues, I'll now walk you through our key financial ratios and balance sheet position as of Q2 2025. Next, please. In the left chart, as we can see, our debt to equity stands at 39.1 at the end of Q2 2025, thereby having an improvement of 3.9% compared to financial year 2024 closing. On the right chart, you can see our debt to capital ratio has strengthened to 61.1, marking a solid improvement of 12% from 73% at the close of financial year 2024, reflecting our disciplined approach to the balance sheet management. Next. Our current ratio stands at 1.19, underpinned by solid uplift in current assets and supported by healthy business momentum through the first half of the year. On the EPS front, Aldawaa EPS stands at 2.25 Saudi Riyal for H1, compared to it stands at 2.26 in June 2025 versus 2.25 in the year before, in the prior comparative period, delivering a steady 0.3% growth. This consistent and sustainable performance reflects the enduring operational discipline and profitability excellence across all Damasco entities. On the EBITDA front, EBITDA margin held steady at 13.8 compared to 13.9 last year, underscoring the resilience of Aldawaa's earnings while executing on growth and investment priorities. CapEx to net sales improved from 3.5 to 2.7 in Q2 2025, attributed to sound capital management and efficient asset utilization. Next, please. Yeah. On the ROA, remained resilient at 7.4 as of June 2025 versus 7.6 for the prior comparative period. On the return on equity side, it has shown a good performance with an annualized range of 25.7 in Q2 2025, indicating enhanced profitability and better utilization of shareholders' equity. Moving to the balance sheet front. With the Q2 2025 results, I'm delighted to share that Aldawaa is continuing to strengthen its financial stability, building on the solid momentum from Q1, and we look forward to delivering another strong set of results in the coming quarters of 2025. It gives me great pleasure to report that key highlights for Q2 2025 include further improvements in treasury and liquidity management, ensuring the best use of financial resources to meet business and operational needs. Very important, the net cash generated from operating activities in Q2 stood at 281 million, showing an improvement of 20% compared to Q1 2025, reflecting disciplined working capital management and operational efficiency. The cash surplus has been strategically used to reduce loans by about 101 million, as mentioned by Mr. Fahad earlier, bringing total outstanding loans down to 520 million by the end of Q2 2025. I'm particularly pleased that this performance comes after a dividend distribution of 107.1 million, representing 0.63 Saudi Riyal per share relating to H2 2024, which is equivalent to 60% of H2 2024 profits, reaffirming our commitment to delivering value to our shareholders. Last but not the least, I would just like to briefly re-emphasize on the Zakat outlook. All the Zakat assessments have been agreed and settled up to year 2023, reflecting our strong compliance standards and governance practices. This is on the financial part, and now I'd like to hand over to Mr. Fahad to reaffirm fiscal year 2025.
Thank you, Muhammad and team. For 2025, we look forward to continue our growth momentum further and further. Our annual year guidance for the remaining of the year will be the revenue will continue, inshallah. We're sticking to the same revenue guidance while revising our operating profit guidance to a low single digit and having a net expansion of 50 stores. Now I'll hand over to Sarah to lead the Q&A. Thank you very much.
Thank you, management, for the insightful presentation. Dear all, kindly note that the floor is now open for questions. If you wish to ask a question, please raise your hand or type your question in the Q&A box. I'll be taking our first question from the line of Michelle Said. Michelle, please unmute your mic locally, introduce your company, and go ahead.
Michelle Said from Franklin Templeton. Thank you for the presentation. I have a couple of questions. The first one regarding the rent and the other regarding the overheads, the employee cost. Regarding the rent, can you please quantify a bit the increase in average rent contract per pharmacy maybe? And if you have a WALT figure, a weighted average lease term that you can share with us to understand on average how long are the leases that you have for your current network? This is one. The second one regarding the employee expenses. It wasn't one of the reasons why you revised down your guidance, but did you experience any increase in salaries given the increasing Saudization rates in the market? And is the recently announced higher rate of Saudization impacting you in any way? Thank you so much.
Thank you, Michelle. Very good question. Thank you again. So for the rent, alhamdulillah, our contracts mainly are 10 years contracts. However, some opportunistic real estates or lands we take, they are quite shorter when it comes to period. And like I mentioned, with some cities, some major cities like in Riyadh, where we have tapped into white land areas, and now they're becoming a central area, especially in North Riyadh, where we see when we renew contracts some spikes in rents, and these are one of the elements that we have touch point on. When it comes to Saudization, the company have already been above what was required by the regulatory affair. So we are in line in managing our expense when it comes to manpower, and we take Saudization as a strategical initiatives for the company when it comes to the community, and we're always, alhamdulillah, ahead of what's been required by the regulatory aspects, mainly also because that they do take into consideration our feedbacks and how can we take things forward when it comes to Saudization in pharmacies as a sector in Saudi.
Thank you. Can you share any figures here about the growth in, if you had witnessed any growth in salaries or the growth in rent, the paid rent?
So for the paint trend is mainly we've seen it in Riyadh. We don't have I don't have yet on me now the numbers. You can drop us an email and we're very much reachable also with the presentation, and we can help you understand the size of impact, especially in Riyadh. On the manpower, it's the expansion of number of manpower. We haven't seen expansion in the cost per manpower, as if that answers your questions.
Sure. Thank you so much.
Thank you. Our next question comes from the line of Hikmet Salahia. Hikmet, please unmute your mic, introduce your company, and go ahead.
Am I audible?
Yes, go ahead, please.
Okay, thank you, Majid, for the presentation. This is Hikmet from Lazard. I have one question from my side. Basically, if I look at the company's net profit per store, excluding the non-core or one-off non-operating income, I noticed that it has been increasing consistently over the past 2 years, despite declining gross margins. This indicates that perhaps traffic per store is increasing more than the cost. So because it's not mainly coming from pricing, it's coming from traffic per store. My question is, how sustainable is this trend going forward? And is it mainly attributed to Wasfati or to other initiatives? Where do you see it coming from mainly? Thank you.
Sarah, I will take that question. So thank you so much for your questions on net profit per store and sustainability trend and others. So I will just say one thing, that first of all, as a group, revenue, the revenue is almost 94% from the pharmacies, and the balance is from other verticals. So that's one part. Now, talking about the growth per store, it is not just to do with I think one size fit all kind of, but I think we have really worked on many areas on this front. And also, I want to stress upon that our pharma non-pharma is both working at the same time. So our pharma business is roughly around 45, and our non-pharma is around 55. Now, where we see a sustainable trend over here is today, because we have worked a lot in the back end when it comes to assortment, and also at the same time building that front momentum. And I've illustrated some of the campaign investments Aldawaa has been doing to build the footfall into the stores. In the last earnings call, I did stress upon the loyalty program, where we revamped our program to build in more and more traction. Now, what is happening is that we are collaborating more and more a loyalty program with banks, with airlines. That partnership is helping us blend more footfall into the stores, and that works very well. And that program today is giving us almost 87% sales of our revenue. So that loyalty focus will remain to be a strong pillar of this future to maintain that sustainability. Number two is assortment changes have really updated as well, because I think what we are offering now with our more house brands and all is giving us a nice entry tier purchase points, knowing that there is price elasticity issues in the market, and Saudi consumer is more price sensitive than before. So that's helping us bridge a little bit more momentum over there. That's number two. And I think on the other part of driving better mix is also driving more cross basket purchase. So continuously bringing in the basket value higher with those cross sellings and all we do with our prescription traffic. like I said, it's not just alone to do with one particular section. It's a combined effort. The e-commerce, which was back in time 4%, is now today standing at 16%. So that's a fantastic growth, and we are on track for a 20% growth in 12 to 15 months. So these are briefly the key pillars we are looking at. And mind you, the journey it's not just about what you see, it's about also what we do in the back end. It's about the patient convenience journey. And that is helping the company really build more momentum. And I think one point which we said it 3 years back, very clearly and openly, we as transparent as we are at Fahad also stressed upon the operating guidance. We had assets in place. We just wanted to build revenue streams to bring in better and better and better momentum. And that financially is a kinetic model which helps us drive more cash flow into our core business. And that is the synergy we are looking at in the near future. That's all I can tell you more on a sustainable trend. But retail is here to stay for sure in Saudi Arabia.
Okay, so you expect that the trend of traffic to continue, let's say 4-5% on a revenue per store basis, let's say over the medium term?
We don't look at revenue per net profit per revenue per base. I'll tell you very frankly, because it's unfair to penalize the stores because of the other financial charges and all. But what if you look at from an operating standpoint, that's more relevant because that's the right investments. And I've already shown the Arbahi and all the campaigns we are doing to build that footfall. And loyalty is going to be the name of the game, and omni-channel and house brands. These are the three pillars which will continue to bring to keep the retail core business of the company growing.
Okay, just a follow up. The number of stores guidance, your expansion going forward, let's say over the medium term. Do you have a guidance post 2025, let's say 26, 27?
Not yet, but when we have, I'll surely send it out.
Okay, clear. Thank you very much. Congratulations on the result.
Thank you so much. Thank you.
Thank you. Our next question comes from the line of Abdulaziz Al Sheikh. Abdulaziz, please unmute your mic, introduce your company, and go ahead.
For the presentation. This is Abdulaziz Al Sheikh from Jadwa Investment. So my first question is on Wasfati. Can you please share Wasfati contribution for the first half of this year compared to same period of last year? That's the first question. My second question is on products prices. Are you doing any initiatives, any discounts that is different than what the company have been doing historically? Or because I remember previously you mentioned that basically your prices are already in line with the market. So I just want to see if there is any change in prices. My last question is on the OPEX. So if you can just elaborate a bit on the OPEX. So you mentioned there is a marketing campaign that happened during this quarter. How should we look at OPEX? Is it the hiring that is the main thing that is driving OPEX higher, or is it the marketing campaigns? How should we look about the operating expenses going forward? Thank you, gentlemen.
Thank you, Abdulaziz. I'll take the first two questions, and the third I'll leave it for BJ. Wasfati contribution stands at 26, was around 24, same period, 23.5 last year. When it comes to pricing, you've seen the market, you've seen the new players into the market. How does the financials look? It is a market. Simply, we have been always saying that Aldawaa leverages more its pharma aspects of dispensing, which gives us its healthcare defensive strategy as a company, while we play other categories as a convenient play. Today, that's where the convenient aspect plays a role, and sometimes we use different promotional tactics as a strategy for us to continue growing our share. And there you've seen it in this quarter, where we had to invest into our promotions to increase our footfall, going back to the 5 main reasons we elaborated at the beginning of the presentation, all of which have enabled us to continue our growth momentum while having some expense increases, which are deliberate from our side to make sure that the company can continue its growth momentum for the year and coming years down the road. So we are very flexible when it comes to what type of promotional activities or pricing strategies, depending on the market dynamics and the different players' offerings in the market. For the OPEX part, VJ, the floor is yours.
just want to add one thing to the pricing part. Is that also there are economic factors which also are very important to take it, because under the retail looks at economic is linked to the economic factors as well, where we look at study the costs and accordingly make the right offerings. So that is a key thing, and to support that pricing sensitivity, it's about playing the assortment and the channel game strategically. And that's where I think myself and Fahad have stressed upon on that. If you don't mind, could you repeat your OPEX question, please?
Sure. So on the OpEx side, I just want to understand basically the growth in OpEx, is it mainly attributed to increase in headcounts or average salaries, or is it the marketing campaign that happened during the quarter is what's driving the slightly higher OpEx? Just to understand how should we think about OpEx going forward?
Sure. So if you want to think about it, then think about that company is on a long-term journey. And I just want to rewind a few years back, where we took some conscious corrective actions. If you remember, 22, 23, we went through a heavy closings and we didn't, and our expenses were absolutely on the edge and very thin. And then 24, we started expanding and building it up in the right manner to build the right base for the future of the company. So that new base creation was critical for us to develop. Now that we are into that right base, and the market is evolving and getting aggressive, because there's a lot of mergers and acquisition happening in the industry on this particular segment. So that's why we had to make some conscious choices this year, and especially in this particular quarter as well. When it comes to OPEX, for sure the company is growing, and I think today I'm happy to say that there are more presenters here today in this earnings, and that's a good sign of a growing company. Our verticals, which were not at all being called upon today, have a proper structure, and we just announced the new structure as well, where distribution and proceed will be merged into one under Mohammad Goizani's leadership. So there will be more the development coming in. Definitely capabilities will also build up in the company as we speak. And again, if you look at the last specifically 12 months, in the last 12 months, the company has really opened more than around 40 to 50 stores, if I take just the last 12 to 15 months. Now, that stores require a lot of dynamics, and things are not the same as it used to be. So it's a mix of, obviously, when you talk about HR, it's a mix of, obviously, the expansion. But at the same time, to keep the momentum growing, you have to continuously fuel in the retail business more and more. So that's the difference what we're doing. The other point which is not spoken yet is that today we are investing heavily upon IT infrastructure. Now, the IT infrastructure is a serious plan for the company, and that's where we have been calling out the new Omni experience coming soon. Now, that infrastructure really helps us create a new Omni experience, improve our SAP enterprises, what we have internally as well, and also build up a strong cybersecurity framework for the company as well. So it's all factors of the company, because mind you, we are not Aldawaa, we are a group, and now we have verticals. So I hope this answers your question and in a
Fair enough.
holistic perspective.
Thank you so much,
Thank you.
Vijay. In fact, that's clear. Just one follow-up on the prices question. So,
yes, please.
So recently we were seeing some aggressive campaigns from some of the online retailers, etc. And what we notice is that some other players are participating in being more aggressive in prices, but we're not seeing that on at least the prices on your website. So just wanted to make sure that this understanding is correct. That basically you're not participating in these aggressive discounts as compared to the other players.
I think I just want to slightly differentiate that. One thing I may say, look, it's not about not participating. We definitely have to. We are in that same play area, so we also have to play there, right? It's just that what differentiation we bring into the package to the consumers, and it's not about the price alone. It's about also the loyalty aspect, the points, the collaboration with other airlines or banks or whatever. So customers today is looking at different experiences. Aldawaa is bringing in a lot of different other perspectives, and the idea is to build the loyalty for repeat purchase. Look, I can tell you one thing very clearly. We do participate on offers, but not to an extent where we completely jeopardize share and obviously not jeopardize next quarter as well. We didn't say that one quarter sell, another quarter recover. If you look at Aldawaa Q2 results, probably the only retailer growing 1.2% versus Q1. The reason is we play across vast categories and we are playing on assortment and we play the regional dynamics and channel dynamics quite precisely. And I want to thank my team for this, honestly, for this precision execution.
Very clear. Best of luck, gentlemen. Thank you.
Thank you. Thank you.
Thank you. Two questions from the Q&A box from Arsal Imran. The first question says, how much sustainable growth do you expect for Wasfati? And after the significant scaling in the last 3 years, how large can Wasfati market realistically get? And how do you think would be the sustainable level of your market share in the program?
Thank you, Sarah. So simply, again, we have always been clear when it comes to Wasfati. We're not a Wasfati company, but we are the biggest enabler of Wasfati in the kingdom. And this has been our language since day one. What we have always been trying to build in the company is to build the right platform that can accommodate this program from an operational standpoint and a digital standpoint, where we have enabled the patient journey to be very smooth without contradicting or having an overlap with the existing footfall of the pharmacy, and also enhance the back-end logistics to have a sustainable operating profit for that program. Now, how big could this program go? At the end of the day, we are the body, not the brain. Again, this is a decision by the Ministry of Health through a PIF company called NUBCO, where they oversee what should be outsourced to the private sector and what should be not. Today, as we speak, they have only outsourced the primary healthcare centers and the hospitals are below 50 beds, meaning the hospitals above 50 beds and the big hospitals across the country have not yet activated Wasfati. Could they activate or no? It's their decision. However, we as Aldawaa, again, as I mentioned in my introductory, we are well positioned to capture any opportunity where we can leverage our infrastructure and capabilities in the market. When it comes to our market share, we're happy to say that from a numerical standpoint of comparing to the number of pharmacies registered in this program, we represent around 19% from a numerical number of branches versus the total national of branches of pharmacies registered in this program. However, from a business standpoint, we represent more than 56% of the program. This illustrates that customers choose Aldawaa when it comes to dispensing from this program because of the different value propositions, I would say. It's not a single answer of why they choose Aldawaa when it comes to dispensing from Aldawaa in such a program as Wasfati.
Thank you, Fahad. Another question on Wasfati. Could you please explain the margin profile of Wasfati products? Are you compensated for the lower prices, which keeps your gross margins neutral? Or is it fair to say that Wasfati does not significantly negatively impact your margin profile?
So we're not losing from Wasfati. It's at the end of the day, we've always been clearly saying that today, look at Aldawaa as a company of a number of value proposition where the uniqueness of us is the bundle of them. Just like you investors, when you have different asset classes with different strategy in each asset class, we have different product offerings, and each product gives us different exposure. Some is a footfall driver, another is a profitability enhancer, and etc. So Wasfati, for example, insurance, for example, footfall drivers. We've got our house brand, which enhance our profitability, and etc. So there is no single answer on that. However, we believe that our unique bundle gives us this unique value proposition, and you've seen clearly that Aldawaa have been having a sustainable gross margin across the past years, while leakage of margin from other players, whether in our sector or different sectors when it comes to retail.
Thank you. A question from Divya that says, as you're planning to increase your online presence, Do you expect any pressure on your margins considering the same? And how do you overall look at competition in the online space?
So I think first of all, the online business is not just one competitor; it's across multi-channel. We do with bricks and mortar, pure players, and also the international players as well. So that's a huge diverse competitive landscape completely than just a typical farmer landscape. Now, in terms of margin pressure, I think it's all about product differentiation, and that's something which we will continue to build up. And I've just mentioned that in my omni-channel growth driver slide, that we are bringing in more and more assortment to offer new and young trendy products into the region. And that's what's trending. And if things starts trending on TikTok and all, then you need to have it in your portfolio. So we are quite agile on that, and we're getting that more and more assortment to help us offset the margin pressure. But usually on Omni, it's more about to drive the non-pharma side. So that kind of protects it in a way. But you really what you want to do is build in more traffic, and as the Omni contribution increases, that will help us or help us grow the margin from an overall standpoint. And again, with the loyalty collaboration, including the house brands and private label, that will what's going to help us uh, build that take that pressure further and build and continue the growth momentum. I think those are the two questions, Sarah. I think both answered.
Yeah, we just received a follow-up from Arsal on Wasfati question. The question says, your Wasfati market share has declined from 70% in 2024 to the 56% you just mentioned. Could you please explain the reasons for the decline?
Sure, Sarah. Thank you very much. So simply today, Wasfati are present in most of the cities in Saudi Arabia. Some of them where they have expanded last year or the year before are in areas where Aldawaa are not present. So what I can assure you is that Aldawaa is growing in every region it's present in. However, some areas are still not feasible for us to penetrate. Small villages where the demographics are not feasible for us to penetrate. What I can tell you is we're increasing on a store level in Wasfati across most of our pharmacies in the kingdom.
Thank you, Fahad. I believe if the management doesn't mind, we still have a few questions. One question is from Kishan. That says, could you please talk a bit on your house brands and what is the current share? And what
Sure.
what is the category that you're exactly serving, and any upcoming new categories in the pipeline?
Sure. So today our house brand share is around 13.6%, and that is where it's been holding on consistently this year. We still have plans in place. Now we have a portfolio which is present across a lot of categories. Definitely more into non-pharma and the health and wellness side, because that's where we believe the more penetration comes in, and it's typical of any pharma industry dynamics. If you take it, the CBS or Boots and anything, all works across in that same pattern. Now, we are entering new categories. Definitely, we see a lot of potential into the non-pharma side when it comes to beauty, baby, and all. I cannot specifically disclose each product portfolio, but yes, there are some exciting portfolios coming up in the upcoming months, and we'll make sure that private label continues to play each category, which is key contributor weighted, and offers that dynamic entry price tier with the best quality, and also with a Saudi-made initiative load combined, because that is what we really want to ensure, that we give the nation much more local offering as well at the right price with the best quality.
Thank you. Our last two questions are from Ahmed Mu'taz. The first question says, was the 5% year-on-year growth in retail revenue driven by both pharma and non-pharma? And the other question says, were you negatively impacted by the shift in Ramadan timing?
Okay, so the growth across and I'll talk from a year-to-date basis, Sarah, because this is not a typical question where we can put it in one quarter. I think what's important to understand that Saudi Arabia is a very different dynamic compared to any other countries we compare it. Ramadan keeps advancing over the years. So it is not just fair to take one particular period and say, okay, fine, you got 10 days minus plus. So the best way to assess is it obviously take us half year results kind of give a better view to that, because that's what we believe in, and hence that's again I talked the message of top line consistency, which we have done even after the Ramadan period. So from a Ramadan standpoint, I wouldn't use the word negative advantage. It's about how you plan and execute for each of the months and each of the months. That's our daily life. So you cannot call it a negative impact. But yes, what happens is definitely you need to plan out better and you need to build more footfall into it in Q2. It's a little more hard work than before. So that's something which is ongoing. The second point of the growth came from both sides, pharma and non-pharma, because it cannot be one side contribute. We did increase in prescription as well, 10%, but the big drivers were also non-pharma. And that's one of the reason our margin is really doing well to stay at the good, that around 36% mark. And the gross profit is also building up quarter on quarter.
Thank you, Vijay. I think if you don't mind, we just received one more question from Marina that says, can you please provide any insights on premium medical devices and whether it was one of the drivers of the higher OPEX in 2Q25?
So for Premi, we've mentioned it since day one. The operating model is very lean, which will go up as sales contribution goes up. The company has made a good start of sales during the semester one. It's starting to be a profit generator entity, still again at very infant stage, and it has negligible, I would say, contribution to our OPEX yet.
Thank you, management. That was our last question. S&P Capital would like to thank Aldawaa management for taking the time to conduct this call. We'd also like to thank all participants for attending. Management, I'll hand you over the mic for your closing remarks.
Thank you, Shara, once again for great moderation of the session. I would like to thank you all for your time and participation. I also appreciate your interest in the Aldawaa journey and look forward to sharing more growth developments in our upcoming forums. Thank you.
Thank you all. You may now disconnect.